Well, I'm very pleased to welcome Graeme Pitkethly, of course, CFO of Unilever. Wonderful to spend some time with you, Graeme, and talk to us as the role of a CFO. How much sustainability, particularly your focus on the climate, has become your role? Did you ever envisage that when you were, the man on the numbers?
Probably not. Probably not 10 years ago, Caroline, but now most definitely. Why is it important? Why does it sit in the CFO space? I think it's probably obvious to everybody that society expects businesses to be more responsible and more sustainable, and that's probably only going to increase as the sort of relationship between business and society evolves after the pandemic. I have to say it's particularly relevant for a consumer products company like Unilever, because there's 2.5 billion people every day who use our products, and actually they want to know more about the company that's behind the products and what that company stands for. On the specific point around the CFO's role, what I found really interesting is that companies and asset owners and asset managers and banks and rating agencies and insurers and pensioners, everybody's sort of connected in this, and I really think we're sitting at a bit of a generational inflection point, and as CFOs, we've got a sort of unique role to play in how all of our businesses respond to that. And if we don't, we'll be held to account, and there will be consequences. And why CFOs? I mean, it's sort of in our wheelhouse, because a really big part of what we do every day as CFOs is just simple market communication. And over the last year, we've seen such an increase in ESG investing, and the market expectations of businesses are moving so fast, and that's before you even consider your customers and your consumers and your employees and civil society. So I've actually become quite optimistic and quite evangelical about the capacity of capital markets and CFOs in particular to be catalysts in this space, and making positive progress.
Bringing that evangelism to us then, because what's so notable is, as you say, this is a stakeholder conversation you're having, whether it be the consumer or whether it be the investor. And we feel it here in particular, the latest rounds of annual general meetings, particularly for the oil companies, have been, extraordinary, because suddenly we've got board seats being changed. We've got really activism within the investor ranks. You at Unilever have been talking to your investor base a long time about this. You've been putting it to shareholder votes. How did you see that coming? How did you get ahead of that? Was it through the conversation with investors in the longer term?
Well, remember that we've had a bit of a head start with this, and really the sort of foundation of Unilever 100 years ago, the way that Lord Lever thought about the sort of purpose of the company and what it was here to do was really grounded in sustainability. So we've had nearly a century of practice at this, and it really started for us well over 10 years ago now with what we called then the Unilever Sustainable Living Plan. And that was an attempt to set out the goals that we had as a company in the area of sustainable business. And we've now integrated that much more simply with 10 years of experience into a fully integrated business strategy for Unilever, which we call the Unilever Compass. And I won't drone on about that, but what was interesting, and to the particular event that you referred to, earlier this year we published, back in May I think it was, our first climate transition action plan, and that drilled into one specific aspect of our Compass strategy. It was around our climate goals in particular, and it was a bit of a cathartic moment for us, because even within the company, preparing and publishing the Climate Transition Action Plan, or CTAP as we call it, was a bit of a seminal moment, bringing together all of the company's philosophy on it, very honest and transparent assessment about what it is that we believe, the way we think that, in particular, climate will impact the business, how we'll impact the climate, what we want to do about it, what we know, what we don't know, what we're assuming in that. And it was a really powerful statement. We did decide, because we had it, we decided to publish it, and we decided to take it to our AGM in May. And that was the first time, and we got over 99.59% shareholder approval of it. But we did that because, as we said earlier, it really is about a sort of deepening, quite fundamentally, the level of engagement between companies, in this case Unilever, and our investors about our climate transition plans. And we thought that in sharing that plan with a really high level of transparency and accountability, we could strengthen that dialogue with our shareholders and really get the dialogue moving. That was the main purpose.
With transparency is data, really, and an ability to measure. And this is what we're talking about, the reporting. How have you thought through the metrics that you need? In particular, I know that this is something that in particular you're working with the task force. A task force member, the TCFD, is, of course, a really focal point right now in terms of a climate change action group. What's best practice that you're coming together with at the moment in terms of metrics, in terms of reporting, in terms of numbers and data?
Well, again, let me caveat this a little bit by saying that we've been at this for a long time. So gathering the data, building the models, putting the processes and systems in place to allow you to measure progress against the targets that you've set takes investment and takes effort. And I'll maybe come back to that in a second, because I think it's important not to be deterred from starting because of everything that might lie ahead. But I mean, you mentioned the TCFD there, and in particular, yeah, I've been a member of the TCFD since its formation, and it's been a really amazing experience with the TCFD. I have to say, we've probably achieved what at the outset would have been at the top end of our hopes and expectations for the recommendations that we were coming up with. I believe, and I'm probably a little bit biased on this, having sat on the task force for a long time, I believe the TCFD recommendations are a relatively straightforward and practical guide to communicating the impact of climate change on your business and your business strategy and your prospects. And of course, you can use both qualitative and quantitative disclosure. But, and it's quite a big but, Caroline, climate change is a really complicated and long-term topic, and you can't underestimate the scale of the transition required to limit global average temperatures to 1.5 degrees. And there certainly isn't one template that can be applied, but mandatory TCFD reporting with a sectoral layer on top of that, I think, is a really, really good jumping off point. Consistency of data runs into trouble as you try to go across all companies and sectors, because if you try to be too consistent too widely, you kind of lose the relevance of that information. So I'm a big believer in some degree of all company disclosure and metrics and targets, but then I'm a big believer also in getting into sector specifics so that all stakeholders can really drill into companies that are in the same space and how they're thinking about climate within their strategy.
Of course, you're vice chair, I should elaborate on, of Bloomberg's Task Force for Climate-Related Financial Disclosures, the pithy acronym being TCFD. And to that end, the experience that you've had, the way in which Unilever thought really deeply about not only the products that you sell, what's within your products, how biodegradable they are, the impact they have on climate, the way in which you're making them, but you originally were thinking about, well, how I, as the consumer, use them. You almost went into as deeper conversation as how much hot water I'm going to be using while showering and using one of Unilever's products. You decided to step away from that side. What was the learnings that you brought as vice chair of this task force that you think you can really bring to bear, the experience that you've had, the decade already within the game, that you're able to share with other companies on it?
It's a really interesting point, actually. So one of the big learnings that we had in going through the Unilever Sustainable Living Plan into the Compass, and then how we think about our TCFD disclosures in our annual report and accounts, being flexible in the approach as you progress, I think, is a really, really important learning that we've had. I'll just give you an example. Under the original USLP, the original plan, it was the 10-year plan that we published 12 years ago, one of our overarching goals, you just touched on it, was to reduce the environmental impact of the company by half by 2030. And two of the underpinnings of that goal were actions that aim to do two things. We aim to halve the greenhouse gas impact per consumer use of our products by 2030. And we managed to get it down by only 10% in 2020 compared to 2010. So we didn't make very good progress with that. And we also set out, for example, to halve the water associated with the consumer use of our products by 2030. And we'll go back 10 years, it was in 2020. And actually in 2020, our water impact per consumer use had rather disappointingly, it was exactly the same as it was in 2010. So these are thorny issues to address. Because when it came to reducing the greenhouse gas and water impact of our products on a per consumer use basis, we'd frankly really significantly underestimated how challenging it is to help consumers like you and me change our behaviors. I mean, frankly, we misjudged how long it takes to do that. It's not very easy to get people to take shorter, colder showers, or boil the kettle less, or wash their clothes in cooler temperatures. And we learned a lot about the areas that we can influence and those where we cannot, and areas where we need wider action from other players, such as a shift in the energy grid towards more renewable sources.
Really interesting how you have to keep on being flexible. Do you think the investor is flexible as well? When you're going out there and having these conversations with your stakeholders, what do they want to be hearing from you? What data is important for them?
It's very varied, Caroline. I mean, going back to, when I started as a CFO, just to make some horrendous geographic generalizations, when you were having investor meetings, the broad question of ESG would come up pretty often if you were in Europe, if you were doing some investor work in maybe Holland or in Germany, but it would come up at the end of the conversation. It came up sometimes in the UK, pretty much if there was a specific ESG analyst or investor in the meeting, and it came up very, very rarely in the US. Now, that was, 6 or 7 years ago. That's changed a lot. That's changed an awful lot. Having said that, there were always investors. I mean, Generation Investment Management or Stewart up in Edinburgh are really good examples of investors for whom thinking about ESG investing or sustainable investing is just fundamental to their investment philosophy. My experience is that those investors are actually setting to one side that they're interested in sustainable investing. They're actually just really, really good investors. I mean, the quality of the questions about business strategy, about your custodianship of the company, your strategy, your governance, your capital allocation, that is at least as sharp and sometimes sharper on the just core financial business points as you get around how you think about your business through an ESG lens. And that has changed quite dramatically. Now, what will that mean going forwards? I think there's a great game of catch-up going on. I think, as I said earlier, there is a risk that the appetite and capability within the capital markets runs ahead of many companies and boards and management's ability to engage fulsomely in this dialogue. And that's why I say that it's really important to, the best way to start is to start. This is a very relevant strategic dialogue for companies and boards to have with all of their stakeholders. But you have to get started, and you have to build the dialogue, and you have to evolve it over time. And as I said, you have to be flexible in doing that, but the capability has to be built.
Is it something, I'm going to use a sensitive word here, greenwashing? And is it something that you worry about, that sort of your story, the decade-long story that you've been having, the experience you have, sort of gets lost in every other company trying to voice their view on it, and perhaps not doing? Is this what the task force, of course, Task Force of Climate-Related Financial Disclosures, is trying to really eke out, is that who's doing it right and who is actually sort of talking the talk but not walking the walk?
Well, the task force wasn't set out to be a sort of a scorekeeper, a gatekeeper, or a rating agency or something who said what's good and what's bad. What it set out to try and do was to provide something useful to companies and investors, to both sides of the capital market, so that they could get started on a useful dialogue about something which is definitely a normal business risk or an opportunity for any business. It just happens to be so long term, it's difficult to see and measure and talk about the impacts on your business. And what I think we did well in the task force was provide an accessible framework. I said earlier that I happen to believe it's quite simple to get started with TCFD reporting, because you can flex it according to how well prepared you are, how much strategic thinking you've done, how much dialogue and analysis you've done within your company, and start to build that dialogue over time with your stakeholders. And that's what's important. I say very often in the context of TCFD, and I'm never sure if it resonates or not, but I believe it's much more important to raise the floor here and for everybody to get started than it is for a few companies, maybe Unilever's in this bucket, who raise the ceiling. It's okay to have companies who are engaged and ahead and like to innovate in these spaces and want to pursue it, but it's much more important to raise the floor than raise the ceiling.
You said you were evangelical about the role in which a corporate can play, a CFO within a corporate can play. Raising the ceiling 10 years from now, how high is that floor that you've managed to bring up? How big an impact do you think you would have brought to bear? Is that something you can elaborate for us?
Yeah, I think certainly from my own personal perspective, it will be the extent to which we've raised the floor at scale that is the measure of success. I see this quite a lot, Caroline, in Unilever, actually, because we're a very purposeful company. As I said, we've got a long history of sustainable business, and we've really sharpened that, and it's very explicit now in how we talk about who we are as a business. And for example, I mean that happens to be very successful in attracting top-class talent to our company, because Generation Z really cares about this, and the best talent wants to go and work in companies that look and act and talk and feel like Unilever does. So that's a benefit to us. But quite often within the company, I have to be clear that if Unilever is 100% successful in all of our Compass strategy with regard to sustainable business, that won't make a difference. Because although Unilever is a very big company, in the context of the global economy, it's absolutely tiny. And so what's much more important is that the broad belly of the economy, that all companies move forwards with this in one way, shape or form than a company like Unilever just being successful. I should also add that our Compass strategy is a completely integrated business strategy. So our vision and really the center point of the strategy is that we set out to be one of the world's most leading sustainable businesses. But we want to demonstrate that by doing so, we will deliver superior value creation for longer, and we measure that by sort of top third TSR within our peer group. And that's a much more stretching goal than just becoming a sustainable business. We actually want to show that you'll be a more successful business and deliver more value creation by operating our business that way. And again, back to where we started the conversation, that's where it's definitely within the wheelhouse of the CFO. This is about value creation. It isn't a either or something that are an opposites. It's all headed in the same direction. That by managing and thinking about our business this way, we'll be a more successful business. And quite often I have to take that message inside the company, that we're not just here to operate the business this way. We're here to prove that by operating the company this way, we're a more successful business, measured through orthodox financial returns.
I remember having this conversations with Paul Polman before then Alan Jope came, and the fact that you can be profitable at the same time as being clean. Has it brought new investors to you? Have you found by singing from this hymn sheet and being evangelical, you're getting more people wanting to buy into that?
Oh, for sure. I mean, the dialogue that we have, I mean, we've got a fantastic base of investors in the company, and of course wider stakeholders, and sometimes default to talking about shareholders all the time when I should talk more broadly about stakeholders. But we're very proud of our investor base. We have challenging, ongoing, transparent, demanding dialogue with them. We're very clear on our capital allocation, our portfolio change, the things we do in M&A, the things we do to be a more competitive business. I'm sure Alan's said to you before, first and foremost, Unilever is about executing the fundamentals of growth in the company and being a brilliant consumer products company with great brands that appeal to more and more consumers around the world. I mean, sometimes, one of the big facts in Unilever is 2.5 billion people in the world use a Unilever product every day. Well, there are 7 billion people in the world, so there's 4.5 billion people who don't. So from the CFO's perspective, my fixation is in, what do we do to attract the other 4.5 that are there? But I mean, it really isn't a compromise. I very rarely, if ever, get into a dialogue with investors, prospective investors, or market participants who seriously believe that there's a choice to be made or some awful compromise between being a sustainable business and being a valuable and successful business. I think most serious investors don't consider that to be a choice anymore.
But Graeme, I mean, we started this conversation highlighting the fact that, 99.5% or thereabouts of your investor base said, yes, we like your plan, your climate action plan. But the transition, the 0.5% that didn't, who says, are they saying we want more? Or are they saying we don't like the way in which you're prioritizing?
Don't know yet, but every time there's not a single vote that we have for anything in our AGM that tops 99.5. I think Alan sometimes gets 99.7 at the AGM, but he's a nice guy and popular with the popular vote. But no, in all seriousness, I don't think we should take too much from the fact that we had a very positive vote on the Climate Transition Action Plan, because it's early days. What's really important is the engagement we now have with investors around it, and the ongoing dialogue that goes from there. It's no different. In fact, we've structured it in terms of the approval in the same way that our remuneration strategy and remuneration policy would be subject to shareholder vote under sort of normal, certainly governance here in the UK. So it's a very similar thing, and we expect to get exactly the same degree of dialogue and engagement over time. The one thing I should say about the Climate Transition Action Plan, it's a super accessible document. I mean, it's an easy read. Yeah. It's very transparent. It's very honest. There's a lot of good data in there. It just, even within the company, was a really galvanizing moment for everybody to say, look, it can be complicated. I mean, we started out in the original Unilever Sustainable Living Plan with over 50 targets. We've tried to simplify that enormously into the Unilever Compass. We've got fewer, bigger goals, etc. But fundamentally, it can still be hard to engage with even inside the company. What the Climate Transition Action Plan is a very accessible document that sets it out in one place and, very, very easy to engage with.
My job involves earnings season and a myriad of numbers coming on to the terminal to break. What numbers do you think will eventually be some of the most important numbers that investors look at in terms of climate, in terms of the data, in terms of the metrics that you're thinking about? Will we be headlining it? Will there be, as we know, if you're an investor, a red head on the Bloomberg terminal? What do you think that would be?
Well, look, I think there's a challenge between the long and the short term here, and what Mark Carney, in being a sort of pivotal spark of what became the TCFD, what he said in his sort of famous Tragedy at the Horizon speech is absolutely right. The problem is in balancing out things that are happening long term with the short term of the markets, and the way that the markets operate today. There's a lot more programmatic trading. Things are inherently short term in one sense, but of course the dialogue you have with investors is still inherently in areas about long-term strategy, your right to win. What are you thinking about new market opportunities? So to answer your question, I don't think things will radically move away from where is the value creation in your business? Where are the future pools of value? How will you access them? Do you have all the tools you need? Do you have the brands, the people, the capability, the assets, the network, the technology, whatever it takes? That'll still be fundamental. But I do think that particularly for companies in all sectors, but just to talk about our sector for a second, we sell branded goods to consumers who really care about the company that sits behind it. And if everybody's starting to talk purpose, and you spoke earlier about greenwashing and woke washing, consumers are really, really smart, particularly younger consumers, and those younger consumers make up more and more of the addressable market that companies like us face. They will very quickly understand if a company is taking genuine action, has got a genuine strategy, is genuinely thinking about these things. So I think that the investor dialogue around it will still be connected to the fundamentals of a business, but you bet questions like water, pollution, plastics, climate and nature, deforestation, carbon footprint, all of those things are going to be things that investors will care about, because the customers and consumers of the companies they're investing in will care about them.